Hello dear traders and welcome to AMarkets. My name is Alex and now we're going to discuss the situation on the financial markets. The first one is EURUSD pair. The euro continues its recovery against the US dollar this week, pushing EURUSD pair to weekly highs. Meanwhile, the US dollar is rebounding from its initial dip toward 106.5 as indicated by the USD index. This shift is driven by improved risk sentiment and mixed US bond yields. Investors expect the Federal Reserve to raise rates by 25 basis points before year-end. Speculation also persists about the European Central Bank halting policy changes, despite suppressing inflation targets and concerns about potential regional recession or stagflation. In the Eurozone, Germany's construction PMI fell to 39.3 in September, with a slight uptick to 43.6 across the broader euro area. Germany also reported an August trade surplus of 16.6 billion, while French industrial production declined 0.3% month-on-month. Overall, the euro is expected to continue its rise. The next one is USD Canadian. The Canadian dollar weakened to a 6-month low against its US counterpart, as a sharp drop in the price of oil weighed on commodity-linked currencies. The loonie was trading 0.3% to the green peg after touching its weakest intraday level since March 24th. Some relief for the currency was a steadying in global bond yields after a sharp spike in recent days that upset investors. US crude oil futures settled down 5.6 at around $84.2 per barrel following reports that Russia may lift a diesel ban in coming day and US government data that indicated weak demand for gasoline. Canadian employment data for September could offer clues on the strength of the domestic economy. Economists forecast as 20,000 job gain in the US dollar, the Canadian dollar are likely to be spinning around official labor market data, which will be published today. And the last one is gold. Gold price has traded sideways since Tuesday as investors await the non-farm payrolls report, which will be given a snapshot of the current status of the United States labor market. The precious metal failed to climb above the $1,830 despite soft ADP employment change and new service PMI orders, as the Federal Reserve is not expected to surrender its higher-for-longer stance on interest rates. The US dollar has risen due to rising real rates amidst falling. Inflation, however, easing labor market conditions could make it less attractive. Meanwhile, the US Department of Labor has reported stable weekly job claims data. Evidence of weakening labor demand, however, could prove a spoiler leading to Fed's interest rates staying unchanged. These are the main trading ideas and news for today. Thank you for your attention and don't forget to subscribe to our YouTube channel.